Hey everybody, welcome to the new year. Recording this at the beginning of 2022, and anybody who's been tuning into this whole series of this process of building an automated trade system on the Gemini exchange, you might know that I set an ambitious goal of having a trading system, the first version of this thing running in the cloud by the end of the year. Now, that goal was not met, surprise, surprise. And one of the reasons why it wasn't met is I was looking at these results of predictions, and something just caught my eye that I couldn't unsee, and that is making me want to at least invest a little bit of time exploring this before putting the first iteration of this thing live. Not to mention, I still have to figure out the selling side of this. So it's actually more realistic that this would be, my first iteration will be live by the end of January. We're at January 3rd right now. But I could probably have a really crude prototype just running locally on my machine just to make sure that the thing is buying at places that I want it to buy. But anyways, getting out of the weeds. And I want to keep this thing pretty short. So let's get back to the topic here. What is this thing that I noticed that caught my eye? Well, if we look at this visual, you can see some blue dots, some red dots. These blue dots up here indicating this is a place where the system would have purchased. And if you've heard this a few times already, I'm just going to say it again. The way this thing is trained, the time frame we're looking at here is data that the model never saw. So this is a true, test sample. We trained up a model, we pickled it, stored it away, and then loaded it up, pulled new data from the REST API, from the Gemini Exchange REST API, and then scored that data based on the features that model expected, blah, blah, blah. And then the model ended up saying, hey, if we had been running, we would have purchased at these points. And each point only benefits from knowledge of the data that happened previous to it. So like this point does not know that the price is going to go back up. There would be no point in building the model if it had future information. So in any case, this is actually a good example of predictions that I like to see. But the problem that I've seen and I'm not able to unsee is that there's a lot of missed opportunity here for some of these really big spikes downward that then lead to an almost immediate spike back up. Like when we're looking at this, we can see that this the closing price here in BAT USD, this is at 1.06 tokens per US dollar per token. That's the price down here. Then very, very quickly, right? This is December 5th in the afternoon. By December 6th in the afternoon, December 5th still. Woo! It's even faster than I thought. So just a few hours later, it goes up to this, an increase up to 1.22. So from 1.06 to 1.22, definitely profitable. That is a very juicy margin to get in on. And what I'm noticing is, if you do the math, let's say you started out with like, some $1,000 that you're trading with, it's going to take you probably a few thousand trades to have let's say that the amount of money that you're spending per trade is proportional to the entire portfolio. So let's say every trade is like, you start out at $50 per trade or something, then you make a profit from that. And the next time you make a trade, instead of it being 50, it's, whatever percentage of your portfolio there is now. Maybe that's like, $50.70 or something. Well, if you set it up that way and let's assume every trade makes an average of like 4% return, then you could say that if you start with a balance of like, somewhere between $5,000 and $10,000 in your account, and you consistently make 4% on your trades, you might need like somewhere between 2,000 and 3,000 trades to increase your portfolio up to like $1 million or something, just as an example. I don't know if those numbers are exact, but so when I'm thinking about in that that kind of mindset, the fact that this system is, like, I mean, yeah, there's lots of different coins that's going to be trading on, but when we're looking here at like 2 months worth of data, we see 1, 2, 3, 4, 5 points that this thing would be buying into the market. And then, it's a while before it's going to hit a local maximum and it's going to say, okay, we're going to sell. So here, this is a 5-day. Oh, sorry, I said 2-month time frame. I was mistaken. This here is just 1 month. So still though, about 5 trades in a month. Not terrible, honestly, if it's making good gains on those trades. But if you were able to, instead of making decisions based on the smoothed out version of the price, if you were able to make decisions on the actual price, you would be able to realize a lot more gains. The tricky thing is that actual closing price for all of these tokens is really noisy, which is why I'm using the exponential smoothing, or, similar to a moving average. The whole idea of like a smoothed out price is that it eliminates a lot of the noise, and we can see that, okay, even though the actual dip, like the rock bottom here, is over here, where the system would buy in is more up here. Because by definition, if you have a moving average or exponential smoothing and you're looking for local minima, you're never going to know that you're at a local minimum while you're there. You're only going to know that it's a local minimum some point in time after that. And in this case, it's 2 units in time shifted forward. So you have to have that period that tells you you're at a local minimum. Well, you only know that because that time period has ended, and a full time period after that has ended. So the problem with that is that when you bottom out in terms of the smoothing function, a lot of times the price is already on its way back up. And so you end up in a situation like this over here, where maybe if you were clever enough to make a decision process based on the actual price, and make it good enough, you might be able to buy here, and then you might be able to sell up here. And that's a very fast turnaround time, and your journey to becoming a crypto millionaire or whatever is going to be a much shorter journey if you're able to have this turnaround of, on this ride up, maybe you squeeze 4 transactions out of this, whereas in the system I'm building right now, it doesn't even play this game, doesn't even buy into this pot over here. And so I don't know yet if this is actually going to, bear any fruit, but I think that there are a lot of price features I'm playing around with that are giving pretty good indications of being able to detect, these extreme spikes downward. The trouble that I'm running into is a lot of these features that do that, they're very prone to, let's see if we just hop over here. They're very prone to picking up on some of these spikes on the way down. Now I'm playing around with some of this stuff to see, is there a way for me to, let's condense this time period a bit, give us something a little bit smaller to look at. Yeah, so here we can still see the grayed out actual closing price in the background, and then this more colorful line on the foreground is the smoothed out price. And here we can see some clusters of areas where just making, we're trying to play around with logic that's just based on features that are looking at the actual closing price. And it's pretty good at finding these spikes downward, but it maybe isn't so good yet at avoiding things like this. Like, I don't want to slide down this price. I just want to get in on the stuff that's like this over here. Or maybe this might even be fine, because then you can come back up. So anyways, I'm going to play around with this for a bit. That's really my update for now. I also want to take the features that I'm using to kind of enhance the ability to look at the actual closing price and try to make decisions in real time instead of make decisions, 2 time periods after the fact that looks at the local minima and the local maxima. Using those as decision points. Maybe I can use that still. Like, maybe this will, where'd you go? maybe this will become something like you might put a heavy bet on some kind of slow oscillating trend that that you buy into a local minimum and you expect that price to go up way high. Maybe that's a good one to almost split resources and say some of these bets are going to be playing the longer game, and some of these transactions are going to be trying to really make rapid fire decisions. I don't know yet. I'm going to see how successful this is. And then if it's going nowhere, I'm just going to default back to this, which we can see is the using local minima and local maxima that are derived from a smoothed out price. That does seem to be pretty good in general. Even if you're not buying the absolute dips, it does seem to be getting it in the ballpark pretty well. And so if we could then avoid things like this, like here, this dip would be fine if you were trading on the actual closing price. Like there's enough movement in price here for that to be profitable. But if we were to buy in here on the trading on local minima and local maxima from the smoothed out price perspective, this is a very bad buy into the market, because now we have one of our two trading slots. I'm only going to allow each symbol to make two trades at once. So this would be saying, like, if we bought here, there's no opportunity to sell for a long time, half a month. And so that's not great. And so I would almost prefer to be trading on a more frequent time scale, so that if you do make a bad buy-in, hopefully that noise in the actual closing price makes it to where that bad buy kind of gets overshadowed by some louder noise that happens to be spiking back up. I don't know. That could be, wishful thinking, but in any case, I even if this goes nowhere in terms of hunting the actual closing price and trying to detect these kind of much higher frequency, occurring oscillations, if I can get those and detect those, that might even just generate some features for the other process, the one that's using the local minima and local maxima based on the smoothed out price as well. So I feel like it's a good investment in time, even if the closing price, using the very noisy price for trying to initiate trades goes nowhere. I'm sure it's going to lead to features that will help the other model anyways. So I'm going to explore that and then still try to keep myself, honest, and still have a prototype of whatever I have running by the end of this month. So we'll see if we can make that happen. And hopefully someone out there is finding this interesting. I know it's super interesting to me, and maybe see you in future videos.